Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the data that you need ahead of the Wall Street Open. Coming up, a Christmas melt-up. Well, US stocks are being eyed after they ended the last session higher on those rate cut expectation hopes. And express delivery, FedEx is expected to post a higher second quarter profit. And US data on deck as well. We've got housing starts, building permits any moment now ahead of consumer confidence and that GDP and PCE number later on in the week. Now, a very good afternoon to you. I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, just showing you the mirror of the Dow Jones Industrials on our IG platform. And we've just got that building data crossing the terminal right now. We were expecting 1.4 million for the month of November. This is the building permits reading. We got pretty much in line, 1.46. And in terms of housing starts, the number that we were looking out for, 1.36 million, we got 1.56, so just slightly higher than expected. And for the month-on-month change, 14.8% for housing starts. Because the numbers were so much in line with expectations, you're not seeing a great deal of volatility there at all. Let's check in on the US 500 as well, which mirrors the S&P 500, because I can tell you that this benchmark is trading just above 1% shy of its all-time closing high. This is as traders start to really price in this aggressive timetable for interest rate cuts potentially early next year. This was prompted by Fed Chair Jerome Powell saying that the historic tightening of monetary policy is probably over. Now, we've also got our eye on the yen, because the yen is weakening after the Bank of Japan's latest policy decision. Here with the details and the reaction, IG's Chris Beauchamp.
The Bank of Japan has delivered the last major news for 2023, leaving policy unchanged. So what was a bit of a surprise, I think, for global markets? They'd expected at least a nod towards next year's expected tightening of policy, but we didn't get that. And indeed, in the press conference afterwards, the Bank of Japan governor was even keen to stress that things wouldn't change for the time being until they got the wage data in the first quarter of next year. So the reaction was, unsurprisingly perhaps, weakening of the yen after its strong run against the dollar since the November highs. And also the Nikkei picking up as well as Japanese exporters heaved a sigh of relief and saw their shares move higher as well.
Thanks very much, Chris. Now, staying with the central bank theme, we also got the RBA's minutes. Now, if you remember, a couple of weeks ago, the Reserve Bank of Australia decided to keep its cash rate steady at 4.35%. Now, the minutes released show how Michelle Bullock and her team of policymakers are trying to find that balance, considering the latest macroeconomic data out of Australia. On the hawks, the board agreed that there is a risk of returning inflation, and the RBA's target range of 2 to 3% will take longer than expected to achieve. Consumer price inflation ran at 5.4% in Q3. But this is also offset by the risk that aggregate demand is slowing more quickly than expected. Australia's economy, if you looked at the numbers, barely grew in Q3. Exports have been on a downward trend since the middle of last year, and households have been cutting back on spending. The jobless rate also hit a 1.5-year high of 3.9% in November. Now, since May last year, just looking at the Aussie dollar versus the US dollar cross, the RBA ramped up interest rates by a whopping 425 basis points, 425 basis points. And that, of course, lifted the Aussie dollar. Futures now imply just a 5% chance of a rate rise at the next RBA meeting in February, 2 quarter-point cuts by the end of 2024. Now, another central bank that we're keeping an eye on is Canada's. We've got the CPI due. This is for the month of November out of Canada. Headline CPI seen rising by 2.9%, down from 3.1% the previous month. That will be the lowest level of inflation since last June. More importantly, core CPI growth is forecast to fall to 2.5%, a new 2.5-year low. Now, this data would comfort Tiff McClem and his team in their opinion that the BOC monetary policy was moderating spending and relieving price pressures. In an interview yesterday, the governor said the Bank of Canada could start cutting interest rates next year as long as core inflation comes down as predicted. The BOC previously forecasting inflation should hit 2% by the end of 2025, but now the bank believes it should be closer to target by the end of next year. Well, earlier this month, the Bank of Canada kept its overnight rate at 5% for a third consecutive meeting, leaving the borrowing costs at a 22-year high. Now, to corporate news, I just want to check on the shares, the US listed shares of UBS, because we've had big news surrounding this bank. Here's a look at UBS's US shares that you can trade on the IG platform when the cash session opens. Not a huge amount of action there, but let's have a look at UBS AG. So this is the shares traded in Germany, and you can see that the shares are up 2.5%. This coming after activist investor group Cevian Capital took a 1.3% stake in the Swiss bank, worth around $1.3 billion. This makes Cevian now a top 10 investor in the bank. Cevian believes UBS could double its valuation over the next 3 to 5 years and has invested just under a tenth of its portfolio in UBS's shares. Now, since UBS agreed to take over Credit Suisse, its shares rose almost 50% up to 25 francs. It's now trading around 26 francs there. Cevian co-founder Lars Forberg thinks it could double that, as he says UBS is valued like an average European bank and not as a leading global wealth manager. Also checking in on Apple for you, because Apple is all sessions on the IG platform. This means you can trade it at any point if you like. Apple shares indicated currently up almost 0.5%. The company says it would pause the sales of its Series 9 and Ultra 2 smartwatches in the US from this week as it deals with a patent dispute over the technology that enables now the blood oxygen feature on the devices. We're not seeing a huge amount of reaction there. Perhaps this was already baked into the share price. But what I can say is that Apple, like many of the companies in the tech sector in the US, have had a very strong leg up of late, especially since the middle of this year, confounding many investors who were saying that perhaps the tech rally was over. One stock that we are watching for you, which is all sessions on the IG platform, is Plug Power, because Plug Power is moving very rapidly. All sessions, pulling up the chart for you there. Plug Power, as you can see there, is down around 1.5%. It has come back a bit. It was down more than 3% earlier on after Piper Sandler downgraded the hydrogen fuel cell firm to underweight. Piper Sandler also cut its price target to $2.30 from $6.50. As I mentioned earlier, reaction there for Plug Power, it's currently down 1.5% all sessions on the IG platform. One other stock that we are looking for you out for you is Boeing, because Boeing is all sessions on IG platform, also moving quite rapidly here. I'll just bring up those shares for you. As you can see there, Boeing is currently up around 0.5%. It was up a lot more earlier because Lufthansa has ordered 80 planes from Boeing and Airbus as well, and agreed future purchasing options for a total value of $9 billion. That's right, $9 billion. That's according to Lufthansa. Now, this deal means that Boeing will deliver 40 737-8 MAX and 40 Airbus A220-300s will be delivered in 2026 to 2032. It's a really big deal because it also includes 120 future purchasing options for both Boeing and Airbus. Boeing shares ticking higher there. Let's check on Airbus because we can also do that for you. Airbus is currently, if I can get the DFB chart for you there, Airbus currently in France up 1/3%. Now, shipping company FedEx is also in focus because they'll report its fiscal second quarter results later after the US markets close. In the past 2 quarters, shipping demand has been down, and in the lead up to the holiday period, shippers have been offering discounts to customers as well. This is in a period when they normally raise prices. FedEx has also managed to benefit, though, from events that affected some other companies in the sector, some of its peers. In recent months, it picked up business from bankrupt delivery company Yellow, also gained some business as negotiations between rival UPS and Teamsters took some time. Now, given the current environment, I'm just pulling up the shares for you. FedEx will be keenly watched because it also has its finger in many, many pies, many sectors, and so it gives us a bird's eye view to how other sectors are doing. But for FedEx itself, investors want to know how much volumes have been hit and how much margins have changed and shrunk. And to commodities, the one that we're keeping an eye on for you today is spot gold, because gold has been interesting of late, especially after the Fed made sounds about pivoting and potentially delivering on those rate cuts early next year. Gold is currently steady at around 2029 per ounce. According to Peter Fairtick, the market got a little bit too excited after the FOMC meeting, betting on big rate cuts next year. But several members are not yet ready and still regard that the risk of inflation has not yet been overcome completely. But from a technical viewpoint, many in the market say that if we see gold break that 100 level, and it is creeping up towards that level, we see a breakout from there, then we could see gold climb even further. Now, before we go, a quick look at how Wall Street is looking ahead of the opening bell, because we're now counting down, and I can tell you that it is cautiously grinding higher as investors continue to hold on to those hopes of early Fed rate cuts in the new year. Well, that's it for this edition of Beat the Street, the show that follows all the trading action for you, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @Angeline Ong on Twitter. This is IGTV.